Turbo Trading with head trader Robert Knight, MBA.
This is a video on drawing chart lines on charts. As I've said in the past, at Turbo Trading we do technical analysis, and we use three main lines on a chart to determine whether it's a buy or a sell. And they are support, resistance, and trend lines. Now we also have some other, I also have some other lines on this chart. This is VWAP because some people like VWAP. I never use it. And I also have the 50 period moving average, which is the dark green, and the 15 period moving average, which is the dark blue. And I use that just for confirmation of the trend. Moving averages are lagging indicators. So it's already, the move has already happened when the indicator flashes a buy or a signal, a buy or a sell signal. So we use trend lines. Now this was this stock PETZ was one that was very active this morning. It's traded 68 million, so very liquid. Gapped up. I mean, it surged here off $1.80 and traded up close to 940 in a week. Very strong chart, but let's have a look at it and see how we traded it today. Now there's several concepts that occur when we draw the lines. So we use support and resistance, but those sort of support and resistance lines and trend lines, they develop patterns for us that we'll act on. So this morning it did pulled back. Now, if you happened to be watching this stock here at the 5 3/4 level, when it made this, when it broke out past that, that's your first pullback entry off right there at 575. You could have taken that trade, and then it popped up. Now, this is too early to really draw any lines. I mean, you could have had a line like that first thing this morning, but it wouldn't really have told you very much. I mean, that was held it. But it did come back, and it did hold support on this trend line that you would have drawn. And here, when it broke over this is your first candle to make a new high. This is your first green candle. Here's your next green candle to make a new high. So that was your entry there. Or you could have taken an entry here at the $6 level when it broke out over that. And so you get this. Now, when you're drawing the trend line, what you want to do is tag as many bottoming points as you can to give you your line. Originally, it would have been like that, but it broke down through it. Didn't break down; it traded down through it. So you would have had to fan this out a bit to get a clearer picture. And in actual fact, to get the best drawing, you take the first pullback low, which is here, and then connect as many dots as you can. And that'll give you, in this case, it happens to be the same line, but that gives you the most accurate trend line. Then what you do is you just make a parallel line, and that gives you your tops and your bottoms. Now, one thing about this is that in this case, you can see it spiked up to the top and broke out through it, got, this will happen, came back in. But once it did come back into it, you can see now it topped in this area here, made a double top. I mean, for indicators of reversals and such, we do use the candles to tell us, here's a double top, you need to get out of the trade. But as far as for entry levels and exit levels, we're using quite often support and resistance. So here's your trend line. If you're in this trade, you just stay in this trade because it popped up, came down. It still held support. Now you want to sell a little bit, and I counseled that here to let a little bit go. It did pop up, pulled back, but it stayed in this trend. You could have stayed in this trade and then it got back up to the top of the channel there again, and so you would sell some at the top of the channel again. So you're piecing it out as it goes up. Then it came down, and we see that it broke the channel, popped up to the channel, failed, and started to sell off. That's your indicator to get out of the trade. Now, it did get back up to an area here. Now let's talk about support and resistance lines. Support and resistance lines are actually more powerful than the trend lines. And you want to, again, draw these lines in an area where you get the most points touching. So in this case, it popped a pullback, and we can see it held support here at the 775 level and then bounced off of it. In this case, we would have had resistance here at around 880. And so $9 would be an area you would want to watch carefully as resistance, but it did get up to 880. It spiked up through it, but it was in a sense a fake out breakout, got to the top of the channel, double top. There was a lot of reasons there you would want to be selling that or getting out of that. And then when it broke back down under 9, tried to get back up, we could see now this is resistance for it. So this is and then when it broke this rising channel line, so it had key resistance at the 9, couldn't get up through it, and then broke down out of this big channel line here. That is your sell sign. That's a reason to get out of that stock. Came back up, failed at 9 again, and now drifting off. There's a few others patterns, the same thing, but this is for drawing the trend lines. This is in of itself, this pattern, big spike up, and then it drifting down. We find that this pattern in the pre-market, if this trades to, or in the after hours in pre-market, if this stock trades to a new high and then starts to come off, and every time you can see, originally you would have, this is pretty early in the morning, so I'm not up at this time, so I wouldn't have drawn a line there. But you can fan it out. There's your trend line. Maybe it's like that. This little spike up through it, and you draw it to there. Then you just make a parallel line to it like that. And you can see, it's amazing how this works. Look at how it held the support on this trend line. Multiple times it touched it and then bounced off it. Now, this is a downtrending channel. And this pattern actually is 80 to 90% effective. You get a stock that's in a downtrending channel like this. If at the opening it pops to this channel line, you short the stock. 90% of the time it's going to sell off sharply and continue to drift lower. In this case, LAZR, you see that it did. But not only was it, you can see it got up to the resistance level, not only the channel line, but in this case, the 50 period moving average also coincided with that. So the key is just drawing these lines. Now here would have been support just before the market opened, because you have this low point here and these points in here. We can see that it tried to hold support that failed, did a little pop through, but then broke down. So not only did it get to the top of the channel line, but it also failed to hold. And what key point to remember, failed support is now resistance. Failed resistance is now support. So when this failed this support, this now becomes resistance. And it trades up to it, fails there, and then sells off. So there was a lot of reasons why you wanted to short the stock at the opening. This is a very powerful chart. And we see that the same pattern is here in this EVGO. This also was in a downtrending channel this morning. Here's your top of the channel. This is your bottom of the channel. Try and get as many points as possible. You can these pops down through it is you don't need to touch those, but you can see this got into a downtrending channel. We draw the support resistance line here. There's your support. At the opening, it failed at the channel line and never even came close to holding support, just straight down through it. But when it popped back up to that support and got rejected, there's your short entry right there at the 1736 with a stop, at 1770 or so. and then it just sold off sharply. Continued down, 5-way move down. Eventually, shorts want to cover, got back up to this 50, maybe the VWAP there, and then continued to sell off. Now it's double bottomed in here. Maybe it does something, but we don't care anymore. It would have been a great short entry. So just to reiterate, the key is you want to draw these lines where they touch most of them. And as I had said in the previous video, the key point is that when you draw these lines, you have to draw the lines exactly the same as everybody else. Because if you're drawing lines differently than everybody else, nobody else is seeing that. And the only reason a chart pattern works is because 70% of the people see that chart pattern and they act on it. Or 100% of the people see that chart pattern, they act on it. And it doesn't work all the time, only 70% of the time. But if you're drawing a chart pattern that nobody else sees, then you have there's no chance that it's going to work for you, and you can't figure out why it's not working. And if it's not working for you, it's because nobody else is drawing their chart lines or using that indicator, and therefore the psychology of the trade isn't being implemented because nobody else. A chart pattern is strictly the psychology of all the traders involved looking at that chart and seeing what that pattern might represent. And if those patterns aren't recognizable to anybody else, then if you're wondering why your chart pattern or your line drawing never works, it's because you're drawing them wrong.
Don't forget to like and subscribe to our channel.